turn it over to you.
Thank you, Kevin. Good afternoon, everybody. It is a great honor for me to participate in the 2022 Housing to Homeownership Fair. We have done it in the past, and it's always great opportunity for us to reach out to the community that you serve. So thank you again very much. Today, we are going to talk a little bit about the options that homeowners have after forbearance plans. Last year, we did cover a little bit about the information as it relates to what are the options for those homeowners who were not able to pay their mortgage payments as a result of the pandemic. So fortunately, that particular stage is over. And when I say fortunately, is because now we are embarking on a new stage, which means that now we have to look at what are the options that homeowners have available for them to keep their homes. It is important to know that while we are trying to cover as much as information that we can today, we definitely have to make sure that the information, if I have to address or answer questions that relates to laws or regulations, it does not mean I am interpreting the law or I am giving legal or professional advice. We'll be more than happy to share with anybody who has questions specifics to the program. If I can get an email for those questions that I cannot answer immediately, it will be greatly appreciated. So going forward, if everything is going according to plan, we did talk about last year about those forbearance plans and what are the options that those homeowners had in order to get their loans postponed or suspended for a period of time while they were dealing with the pandemic and the impact, the financial hardship that they were facing when they were facing with the pandemic, like many of us have. But some of those programs were available on different stages, and it depends on the type of program that a homeowner would have. And essentially what we did is we talk about those that were available for all of us, those programs that were available to us, and they were offering different options for them to suspend their payments. And of course, the moratorium that Oregon imposed to foreclosures, it expired at the end of last year. And now, obviously, most of the homeowners who were able to regain employment, probably they are now negotiating with their lenders about what are the options for them to keep their homes if, for example, they were not able to regain employment with an income that will help them support that payment. So there are a lot of case scenarios, and there is obviously a lot of options. So one of the resources, the best resources that we can have is talk to our housing counselors, a network of housing counselors that Oregon Housing and Community has. And of course, NAYA, because they have individuals who are not only versed, but they understand and can provide with good guidance. So going forward, we did talk about last year about those options for forbearance plans and what these agencies specific that have those what is considered a federally backed loan are. And essentially the ones that you see on your screen are those programs that enacted or imposed, actually did have specific programs that they can help their homeowners after the post-forbearance plans. So just so we are on the same page, federally backed loans are those that you see on your screen, the Federal Housing Administration on their different programs that they have within that type of loan program. The Department of Agriculture and Rural Development, most commonly known as Rural Development Loans, also have their options. The Department of Veterans Affairs also has options for their customers as to what are the options available for them. But Fannie Mae and Freddie Mac, which are the largest companies that facilitate the liquidity for home loans, which are Fannie Mae and Freddie Mac again, which has about 60 or if not more of the home loans in the United States. So conceivably, most of the homeowners that we are talking to today have this kind of loans, but I'm sure there are other homeowners who may have other type of loans that are not within this loans that are considered federally backed loans. It depends. So one of the recommendations we wanted to do is obviously is that they can talk to the servicer and ask specific informations and tell them about your financial situation, about what are your income and all of those elements that is important for a lender to make a determination what are the loan programs or the options, the loss mitigation options each homeowner may have. So going forward, in general situations, there are several options that some lenders have. For example, reinstatement plan. And obviously this will be a plan that requires a lump sum payment, provided that we can make those payments. In most cases, probably not as possible, because if a homeowner has a forbearance plan that lasted for a whole year, which is actually was allowed up to 18 months, that means a lot of money that we'll probably not be able to pay at once. So it is good to know that those federally backed loans do not require a lump sum payment, and instead have other options that we're going to briefly discuss later on. So, but in most cases, most of the services have different plans that also does not require a lump sum payment. So that is the good news. So the other options will be, for example, a repayment plan, provided that we maybe regain an employment, and we have an employment that now we can add a little bit more extra of what we were paying before the forbearance plan. And so if that is something that we can do, it'll be probably the easiest and fastest way to be able to catch up with those payments that were suspended or forborne. So in some cases, the lender may be able to say, well, maybe you can pay within 3 or 6 or 12 months. Generally, most individuals are asking for a 12-month repayment plan, again, provided that they can make those payments. And the deferral. The referral is most common and popular right now, for lack of a better word, because what it means is that the amount of money that we were not able to pay during the forbearance plans means that they can be added to our loan. And likely that is going to be obviously extend the term of the loan. And in some cases, maybe it is necessary that interest rate will have to be negotiated if that is the case. But a deferral essentially means that the amount of money that we were not able to pay, that it could be added to our loan, in most cases without any additional fees or any penalties. That is also another good news that most lenders are adopting. Obviously, the typical refinancing for those homeowners who are not still under a deferral plan. So it's probably one of the best ways to be able to protect our credit score, which for a lot of people is important. That is the positive side, but we would have to pay closing costs. So in order for us to refinance, although interest rates, as you probably heard, are going up, likely is something that you have to consider and make sure that is something that would be beneficial to you. We have been hearing that in most cases, most homeowners are asking for a loan modification, which means is the change of the terms of one or more of terms of the original loan, which could be perhaps a lower interest rate, or it could be an extension of the term of the loan from, let's say it was a 30-year loan and now it can be up to 40 years, for example. But essentially what it is, it changes some of the terms of the loan. The negative, the part of the con of this, the negative part of this option will be that it will affect our credit score. The positive side will be that we do not have to pay closing fees. So that is another option that will be good for us to consider in case we definitely a loan modification is the only option. So, but yet that is another option. And of course, if for some reason the homeowner is not in position to retain homeownership, whether for personal or other reasons, obviously selling the home is one of the best options. The good news at this particular point in the market is that the market conditions are in favor of the homeowners because likely they have gained some equity. You probably heard the prices of the homes are going up. And so good chances that a homeowner who wants to sell their home will have a little extra money left to do whatever it's convenient for them as it relates to their finances. In the past, about 10 years ago, during the financial crisis, it was a very common option to have a short sale transaction, which essentially means is that the amount of the loan balance is equal or higher than the value of the home. And of those of you who remember that was a particular case, and it was very common to see that homes were undervalued. Obviously, the lender had to consider that option as a short sale. I don't think this is going to be a current activity or a usual activity at this particular point, precisely because, again, homes have been going up in value. But there is another option that is called the deed in lieu of foreclosure, which means essentially if there is no other options than the ones that we have been mentioning earlier, that probably if the lender accepts that we can surrender the title of the loan in favor of the title of the home in favor of the lender. Likely this is not going to be a common option, but it is an option that ultimately it will help us to protect our credit, again, because for some people that is important, and again, trying to avoid foreclosure. So I want to talk a little bit about a new program that my agency has. So let's assume that none of the options to keep our home was available. If we want to keep our home, the United States Treasury allocated funds to Oregon through Oregon Housing and Community Services, which is intended to give a last resort and a temporary solution for those homeowners who are trying to stabilize themselves financially. And what I mean by that is that this particular program is not a long-term solution. And we recommend that homeowners look at the other options before they look at our option. But it is something that you can think about if for some reason your lender, for example, say, no, we don't have any options of a loss mitigation for you to keep your home. So you probably, if your lender is participating in this program, we can probably assist you, provided you meet the eligibility requirements that we have to be able to qualify for the program. We have been doing this funding in phases. We are focusing at this particular point on those homeowners who are at risk of foreclosure. In other words, that since the moratorium expired last year, the probably lenders are already starting those foreclosure process. So what essentially we do is that the lenders are actually already sending those notices of foreclosure, whether judicial or non-judicial. And that is another discussion that we could probably have down the road about explaining how the foreclosure process happened in Oregon. But at this particular point, we want to focus on the options to keep our home. Again, as I was saying, there are different phases. The one way for homeowners to find out if they are eligible at this particular phase, if you are in foreclosure, is to visit our website, and we have posted that on our last slide. So I'll make sure that I have that available for those of you who want to learn more about the program and see if that is an option for them. Essentially, what the program is a loan, a subordinate loan, that for those who are eligible, that they don't have to make payments on those 5 years, and it can be gradually eliminated, for, if you will. So in other words, the amount of money that we assisted with is for 5 years, and the homeowner remains on the home for 5 years. Those funds does not have to be paid back. So if they refinance or they do something with the home, or they do not occupy the property as a primary residence within those 5 years, likely there's going to be a calculation as to how much they have to pay back. So again, it's a loan that is subordinated to the first loan, and so it is important for us to think about that as an option. The assistance can be used again to catch up with home-related past due payments. Like, for example, for those who were in forbearance, and the lender said, no, we cannot put your loan on a deferral plan, for example, that maybe this is an option for you. And of course, there is a cap limit as to how much we can assist with. You can also use that that assistance to pay your property taxes after a tax lien foreclosure. Briefly, when we do not pay our property taxes, after 3 years of unpaid property taxes, the county where the house is located will start the foreclosure process. But there is a gap, there is a process, a period of time after the judgment was done, where homeowners, it's called a redemption period, where the homeowner might be able to recuperate or get back on track. So homeowners that are in that situation could probably be able to use our funds to be able to bring those tax liens correct. And for those of you who may live in a homeowner association or on a condominium rather, and you owe money to the homeowners associations and they're in default, then that will be also another eligible homeowner that can use those funds. Now, there is a type of loan that is intended for homeowners that are over 62 years or older. It's called reverse mortgages, and the most common is home loan by the FHA is called the home equity conversion mortgage. That it requires the homeowner, for example, to pay for the property taxes and also for their insurance, keep the home in good condition, also live in the property. So if a homeowner that is 62 years or older that has a reverse mortgage, and we're not able to pay for the property taxes or insurance, that is another element that we can be able to help them bring that correct. So that is another option. But we expanded a little bit more to be able to help those homeowners who obtain loans with manufactured homes as well, and even those homes that are on a river, for example. So there are a lot of options that homeowners can have. Again, the best way to be able to find the details about this program is by visiting our website or give us a call. So there are obviously some requirements. It is available to homeowners who are the loan borrowers, and also they live in the property and they use the property as a primary residence. And there are also income limits that we have described on the website, on the link that we're going to provide later on. So that is important to take into account. And of course, they had to be affected by the COVID-19 that started on or after January 21st of 2020. Another important component, as I mentioned it earlier, is that the mortgage servicer, the lender, would have to participate in the program. It is a voluntary program. We do not require that every single lender or mortgage servicer participates on the program. And typically, for those federally backed loans that we did mention earlier, they actually encourage, or they have available, and they elaborated some guidelines about how a homeowner can have, for example, the use of a loan modification, and in addition to the homeowner assistance fund. So there are a lot of elements that we have to think about, and I don't want to provide incomplete information. So again, I encourage those of you who are interested in learning about this program to visit our website. For now, we are focusing again on most of those homeowners who are at risk, most at risk. So in other words, they're in foreclosure. They have no other options to save their homes through their mortgage servicer. And maybe they are receiving unemployment benefits as a result of natural disasters. Oregon has been affected for wildfires, for example, in 2020 and 2021, and they are still trying to be able to recuperate from those natural disasters. So this program may be able to help you on assisting with a percentage to be able to get you back on track. Again, we did mention about those homeowners who have a reverse mortgage and they have defaulted on the mortgage. We probably will be able to help them. And also, in addition to those federally backed home loans, we are also willing to help those homeowners who obtain loans from private investors. And private investors means there are none of those that we mentioned earlier. It could be loans, for example, that the financial institution is keeping it in portfolio, or maybe it's just a small lender that provides with this loans. Those are out of the scope of those federally backed loans, so likely they don't have specific guidelines. But if a lender is willing to participate on the program, we'll be able to assist them, provided they're 120 days or more delinquent. And there is a type of loan program for those individuals that do not have a social security and they have used an individual taxpayer identification number. If they obtain a loan with this particular loan and they're 120 days or more late, we will be able to help them as well. So I guess we try to look at every single case scenario, but not just about the case scenarios of the homeowner, but also the type of loans that they may have. So we are not saying to no to anybody who may have different type of loans, provided again they are meeting our guidelines. So what we are suggesting at this particular point, the best way to be able to find out about the program is not if it's talking to a housing counselor. There is a network of housing counselors that Oregon Housing and Community Services have, and that website over there will be able to give you good information. But then again, we have the specific website that homeowners can visit and find out a housing counselor near you that can help you and guide you through the process. And first, it is important that a homeowner talks to a housing counselor to determine whether that homeowner may meet the eligibility criteria for the program. We encourage homeowners, obviously, to have documentation ready, and that is important for both the counselor and the program to know, like social security numbers. We would like to see, obviously, mortgage balances, property tax balances. The most recent year will be ideal. And to verify a residency, an account, utility account statement will be useful. It is important for us to determine and make sure that the homeowner lives in the property, and this is one way that we can determine that. And for those homeowners who live in a condominium, we would like to also see those account balances to make sure that the eligibility criteria has been met. One thing that we want to make sure is that whoever is willing to assist us with this program, or have heard, or a homeowner hears somebody to say, hey, I can help you doing this, and it is not a housing counselor, it is very important for homeowners to know that access to this particular program is free of charge. We do not want people, homeowners, to be taken advantage of. There are ways to be able to find out if a company is permitted or allowed to provide with foreclosure assistance. So it's very important that a homeowner verifies who they are talking to or who they are providing their information. And we have some resources later on that you can see about how to find out if the person or individual is permitted to conduct these activities. So as I was saying, it's a very good idea to get information, if not through a counselor, to do some research. And we want to encourage for individuals to visit the Consumer Financial Protection Bureau's page. They have a very good information about post-forbearance plans. They also have a good information about how to protect yourself against potential fraud. The Federal Trade Commission also addresses problems with fraud. The website is ftc.gov. And there is a website dedicated for those individuals that may have problems with their financial institutions, specific with banks. And the website address is helpwithmybank.gov. All of these resources are federal agencies that provide with resources and reliable information. But we also have some state consumer protection agencies, one of them being the Oregon Division of Financial Regulation, which is a consumer and regulatory financial state agency. The address is as the one that you see on your screen, but you can also give them a call. Their services are free and they offer reliable and legitimate information. And last but not least, the Oregon Department of Justice, of course, has a consumer protection program. The phone number that you see on your screen is the one that you want to call, and make sure that you ask the questions. And but that is the whole idea. Ask questions, make sure you're asking questions to the right people. If it's not a housing counselor, go to this website, to these agencies, so you can obtain better information. The most important thing is that you don't want to expose more yourself to financial risks, because you're already dealing with financial difficulties, and the last thing you want to do is pay somebody who is not permitted or licensed to conduct these activities. We thought it was a good idea to provide with some of the resources. Of course, a very important thing is to take a look at our budget, especially when we are about to embark with negotiations with our lender about how much we can pay. It is important that we have a good understanding about how is our budget. So we offer that first link that it gives us a good tool about budgeting. And there is the second link that we are offering is an example of mortgage statement. One of the documents, we hope that you have it at hand, either when you talk to a housing counselor or when you are applying for the Homeowner Assistance Fund program. A lot of people ask, but I don't know what kind of loan that I have. There is a loan document for those, especially for those homeowners who obtain a loan on or after October 2015, that is called Closing Disclosure Statement, that it has a section on the upper right corner that it tells us what kind of loan we have. So that is another way for us to find out if we are not having too much luck with our servicer. But our servicer should be the entity that we call to let us know what kind of loan we have and what are our options to be able to keep our homes. The next link that we offer is the one we have been offering. Go and talk to a housing counselor. Again, these individuals are not only trained, but they provide with legitimate information about what will be your best option, because it is important that you have a good guidance about the options that the lender may offer you. And last but not least, we have a link to a video. And I'm going to ask Kevin to please play the video so we can see what the options that we have in general terms to be able to discuss with our lender or our mortgage company. So I'm going to stop sharing my screen. Kevin, if you'll be so kind, please.
There are a number of options for repaying forbearance. But which options are available to you may depend on who owns or backs your mortgage servicer, and your particular situation. There's no one-size-fits-all for options. For instance, if you have a federally backed mortgage, which is a loan from Fannie Mae, Freddie Mac, FHA, VA, or USDA, your servicer cannot require you to pay back your forbearance as a lump sum. Many servicers for non-federally backed mortgages also do not require lump sum repayments, but some may. So if you only hear about a lump sum repayment, ask about other options. There are 4 common ways to repay the money due from your forbearance. The first option is sometimes called a repayment plan. This can be a good option if you can make your regular mortgage payment plus some extra. It adds the amount unpaid during the forbearance to your regular monthly payments over a certain period of time. Let's say your servicer offers you a forbearance where you can pause your mortgage payments for 3 months, and your regular mortgage payment is $1,000 each month. So the payments you miss during your forbearance add up to $3,000. Suppose your servicer offers you 1 year to make up the $3,000 that was unpaid due to the forbearance. Doing the math, that comes to $250 added to your regular mortgage payment each month for 1 year. So your total mortgage payment would be $1,250 until you make up the skipped payments. After you've repaid the payments you skipped, your monthly payments would return to the normal $1,000. Another option is sometimes called payment deferral. That's when you wait to make up your unpaid forbearance amounts until the end of the term of your loan, or when you sell or refinance your home. This option can be useful if you can keep making your regular payment but can't pay any extra. If you receive a payment deferral, you don't need to make up the payments you were allowed to pause or reduce during forbearance until the end of your loan. At the end of the loan, your servicer may require you to repay the skipped payments all at once from the proceeds of the sale or through refinance. Let's say you sell your house in 10 years. In that case, you would pay off the forbearance then. Another option is sometimes called a loan modification. That's when you work with your servicer to change the terms of your loan to accommodate the missed forbearance payments. A modification might be right for you if you can no longer afford your regular mortgage payment because of a permanent change in your situation, such as long-term job loss. A loan modification would be, for example, if the servicer adds the missed payments to your entire loan balance, then recalculates your monthly payment, adjusting your loan term to bring your monthly payments to an affordable level. So instead of having 20 years until your mortgage is paid off, you might have 22 years to pay off your new loan balance. As you can see, your monthly payments may be lower, but it could take longer to pay off your loan, and you might have to pay more interest over the life of your loan. The final typical option is the lump sum payment. It's just how it sounds. As soon as your forbearance period ends, you repay all of your missed payments in one payment. So let's say your servicer offers you forbearance to pause your mortgage payment for 3 months. With a lump sum repayment agreement, in month 4, you pay your normal mortgage payment plus the payments you paused. So if your mortgage payment is $1,000 a month, in month 4, when your forbearance ends, you will pay $4,000. $1,000 for your normal monthly payment and $3,000 to repay the payments you skipped. After that, your monthly payment will go back to the normal amount. If you have the money to make the lump sum payment, this can be a simple option for getting back on track. However, many borrowers may not be able to afford the higher payment. If that's the case for you, ask your servicer about other options. Remember, if you have a federally backed mortgage, you will not be required to pay your forbearance payments back in the lump sum. Those are a lot of options, but not all may be available to you. It's important to work with your servicer to understand the process, consider your next steps, and understand the best option for your circumstance. For help talking to your mortgage servicer or understanding your options, or if you are worried about foreclosure, contact a HUD-approved housing counseling agency in your area.
Excellent. Thank you, Kevin. I appreciate it. I'm going to start sharing my screen back now and go to the slide that we are going to discuss right here. Okay. So again, I wanted to make sure that we try not to confuse people that you probably heard using the term servicer. Essentially, that's obviously the company where we send our payments. Sometimes we call it mortgage company, and sometimes we call it lender. So just to make sure that we are not confusing people, essentially the company that is that you're gonna be negotiating the options for a loss mitigation or a plan that can help you keep your home is your mortgage servicer, just to make sure that we are on the same page. But just so we can summarize what we've discussed today, and depending on your current situation, this is what we'd like to suggest to you. Be sure to prepare a budget based on your current situation. Make sure that you know and you have an idea about your ability to be able to pay the mortgage. It is a good idea to have your mortgage documents at hand. It makes easier for the housing counselor, or in this case, if you are considering applying for our program, it will be good to have your mortgage documents at hand as well. We always encourage to contact your mortgage servicer. Continue the conversations, because they are the ones who can tell you what are the options that you have available. Always write down what you are communicating with them. And it is important that you take notes as much as you can, so you will be able to, if you need to recap your discussions with them, that you have those notes available. Most importantly, ask a housing counselor for help with guidance or assistance with your application if you're applying with for our program. And as important, avoid falling a victim of scammers. So for those of you, those homeowners who do not have any other option with their lenders, perhaps the Homeowner Assistance Fund will be an option for you to keep you afloat for a little longer, so you can see if you are able to get back on track with your finances. This program might be able to help you. We have two particular programs that assist with the past due payments, which essentially is an assistance with up to $50,000. And we have another one that is called the Ongoing Payment Relief Program, meaning for those of you who may be able to agree with some kind of program with your lender, but you're still struggling to make those payments, or your income is not as much as it used to be, then probably you'll be able to benefit from the ongoing payment relief. Most importantly, and we will encourage you to visit our website, which is the one that you see on your screen. We have a lot of information there, and including, again, a list of our housing counselors that can guide you through the process. And of course, we want to include frequently asked questions that you can see and answer your questions if we were not able to answer those today. So I think, unless I'm running out of time, I think we have a few minutes to left. I wonder if there are any questions that anybody has.
Awesome. Thank you, Fernando. That was fabulous. I'm looking in the chat right now and I don't see any questions.
Okay.
If you do have any questions, definitely feel free to put them in there, and we're happy to ask Fernando and tap into his knowledge.
Right. So it's important. Kevin knows how to find me. And so if Kevin is not in position to answer it and you want to know a little bit more about our program, or maybe just in general terms, it's virtually impossible for anybody, and I can tell you this by my own experience, it's very difficult to learn or remember everything about this particular component of foreclosure prevention. So we all cooperate with each other, and again, Kevin knows how to find me. And of course, we continue our communication. So unless there are any questions, I can thank enough, Kevin, for the kind invitation. Of course, NAYA is one of our the organizations that we fully support for the good that they do to the community in general. So, and we wanted to maintain that partnership on the future.
Yeah, absolutely. Also, just to let everyone know, if there aren't any questions, we do have a survey. Let us know how we did, what we can do better, what topics you're interested in. It's great to get feedback from you guys. And if there are no questions, then I certainly hope that everyone has a fabulous rest of your weekend. I do want to say a big thank you to Fernando and OHCS for presenting today. That was fabulous and a lot of great information. And yeah, if there's no further questions, we look forward to working with you in the future if you need assistance. And other than that, thank you so much for coming out today, and have a fabulous rest of your weekend.